Hello, this is Coach Mike from WinningStockCoach.com. Gonna start this video off going over our weekly market overview and beginning here with the SPX chart. That's our S&P 500. Saw it blast through our first interim target. The chart that you see here, this is actually displaying my maximum target here that I've been able to find for the S&P 500 of 2027.03. Interim target that we saw, and if you want to see the exact value, I'm going to move it down to just a shorter time frame chart. This 1987.08 nearly came up and hit this on Thursday. We did have a short week this past week. Just looking at a couple things here, that 1987.08 there. If we were to have a really slow but green day on Monday, that would put some explanation as to why we'd have a slow day up there. The other thing to look at too is if the high's been made. You see the two red Fibonacci extension lines I have, 1962.11, 1902.52. Those are potential pullback points, but it's based on if the 1985.59 remains the high, which sadly we won't know that until we start to see a pullback. The one thing I would look at though, as I look at the grand scheme of things, I'll be the first to admit that I never expected that 2027.03 to come into play. Actually, once we broke over about 1900, actually 1900 was really where I thought we'd kind of top out at. So I'm an honest person. I'll admit when I'm wrong on my targeting and such, but I do know that it's continued to go up, and you have to trade for what it's doing. It continues to make higher highs and higher lows, and you have to trade for what it's doing. Going into the upcoming week, I would think that if we were to break that 1987.08, we would be okay on a momentum trade, much like last July, where we got a bit of continuation before a really poor August. You see that down here where my crosshairs is moving. This was our August last year. July, we had some strength. It's kind of a little bit flat with just a couple pops in July last year. Remember, we are in summer trading, so things can be a little bit wacky at times. But overall for the S&P 500, it continues fairly strong. Whether or not people are doing a good job of explaining why it continues to look so small or so strong, I can be the first one to say that I have no clue why we haven't had a decent market pullback. I'm not even saying a market crash, but the market kind of needs a pullback to make things more appealing for better entries. So looking here at the S&P 500 overall in the interim, I think that if we were to get a pullback, I would look for the potential to add to or to create new long positions off of that 1962.11 if it were to pull back to that point. That being said too, I think we got to trade for some continuation for that 2027.03, and to be honest, after that point, if we break above that, I've seen, and personally I wasn't able to recreate it with my own charting, but I've seen 2279 with some other analyst charts as a potential high point for the S&P 500. I got to be honest and say I couldn't see how they got those numbers, but things that we'll have to watch for. I think just as we've seen for the past almost 2 years now, actually really you'd have to say the last 5 years, any pullback you see in the stocks that you watch have to be viewed as opportunities to buy them, unless there's a fundamental change that causes it, as in poor earnings and such, or the rest of the market's just absolutely falling apart at that time. So be watching for those opportunities to add to long positions and to create new long positions as your indices give you the opportunities to do so. And just remember too, nothing goes straight up, even on the chart that you're seeing here. Even though it's gone up overall, it hasn't been straight up. So, watch for those opportunities to take good buy prices and to increase your position sizes. Moving over to the Dow Jones Industrial Average chart, the DJI. We spoke last week about the consolidation that we were seeing, and that good trades would come on the break, and we were looking at a close above the consolidation highs. We had that on Tuesday. Wednesday and Thursday were continuations of that. We did blast through the interim target, 17,020 and 38 cents. I think the DJI right now, we could use that prior swing high, that consolidation point, as a support level in planning our trades, and 17,209.51 would be my next target area for the DJI. Moving on to the Russell 2000, our RUT chart. We had our target 1212.63. It actually spiked above it early last week, but it looks to give us some continuation, and we're looking more at closing prices when we're making these target area suggestions. 1212.83. So again, kind of like the S&P 500, I won't be surprised to see some continuation, and maybe even either a decent Monday or a slower Monday and Tuesday this week, getting up into that target area. But we are approaching that first target area on the Russell 2000. But I want to make a reference to a similar area that we had, and it was actually on the NASDAQ 100 chart. We were looking at the double top. You're going to see me go over to the Indice, which is our NASDAQ 100. We had that area, and you see we kind of hit into it and consolidated across it for about a week and a half before breaking above that point, and it was right into that double top area. So if we get into that similar chart pattern with the Russell 2000, what I want to do is begin to use that point as our support / stop area for small caps as we look for continuation on those. But very, very similar chart pattern to what we saw to the NDX. Russell 2000 is just kind of lagging it a bit. So we'll keep an eye on that for our small caps, because down in here, we've talked about these for several weeks, how we believed our small caps had the best upside potential, and the Russell 2000s in this time since then has outperformed the S&P 500 and the Dow Jones Industrial Average. So we made a very, very good observation and took very outstanding opportunities for these moves. So now we're getting to that point where we have to honor the resistance, but because we've seen the very similar chart setup already, we need to understand that we don't need to necessarily be selling small caps into the resistance. We'll sell on a pullback from. We got to be willing to give a little bit back for the opportunity to make more, because if it does end up following the rest of the sequence as it's copied so far from the NASDAQ 100, even though they are separate indices, separate stocks that make up the composites, that continuation could be a big miss on profit if you're selling a little bit too soon because you're not willing to give up a couple pennies. So keep an eye on that in the upcoming week, because if it were to make that breakout, I believe it would be this upcoming week. Finally, our NASDAQ composite chart, the COMP. This was a good breakout call for us here. Over the past 3 weeks now, my videos, I've really encouraged to look at your NASDAQ stocks as the breakout happened over the double top. You see, I even got some emails about it. Great call. You had us buy into consolidation, but let's look at it now. And you're right, great call, because we got that breakout and continuation. Been a phenomenal breakout play. Momentum trades have been really, really good on your NASDAQ stocks. So at this point in time, just like I did a few weeks ago when I said the NASDAQ stocks were the best risk to reward potential because we were sitting right here on this support line, we've got to look at it now and say the ones that you're in you need to watch for pullbacks to maybe plan exits. I wouldn't go looking for a whole lot of fresh new ones. I don't believe this one has that same momentum opportunity it had a few weeks ago when I had first said that, and even this past week when we spoke about it again. So, it served its purpose. It's done its thing, and I think now we need to look more over to that last chart we went over. We'll go back to that Russell 2000, the RUT, and look at the similarities in the pattern where we're at that double top mark, just a little bit above it, but close enough. This is that 12.1263 is the momentum point we'd be looking for, that breakout point, to then focus more on getting continuation like we saw in the NASDAQ in the past week and a half. This is Coach Mike with WinningStockCoach.com, wishing you the best of luck on your trading in the upcoming week, and God bless.